Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/The Smattering, to get access to the 10 best stocks to buy right now. Let's go back in time. Let's go back to January 1st, 2020. It's pre-coronavirus pandemic.
Jason, that feels like decades ago.
Tyler, you're right. It's been the longest 3 years of most people's lives. There's no doubt about that. But I want to talk about something esoteric that's also hugely important and affects everybody's lives, and that's housing. We're going to talk about home builders. Tyler, we're in a housing recession right now, today. But if you go back to January 1st, 2020 through today, here in March of 2023, the past 3 years and almost one quarter, every single one of the largest home builders in the U.S. and a large cohort of the top 10 home builders have made for great investments, significantly outperforming the S&P 500, which has done relatively well over that period. I'm Jason Hall. I got Tyler here with me, Tyler Crow, and we're going to talk about everything that's happened. We're not going to talk about everything. That'd be stupid. We're going to talk about where we are with home builders, the housing market, and looking at home builder valuations today and looking for, are home builders worth buying or are they worth owning from here? Tyler, where are you thinking on that?
You and I have talked home builders a lot over the years because it's one of those itches we just can't stop scratching. We just look at housing and go, this, as much as people don't want to think about home builders that much because they are cyclical businesses, we look at it and go, they're going to make money. They're going to do good. And like you, just to your point, we were pulled back to 2020. S&P 500 total returns, they're quite good. And almost to a T, home builders smoked the S&P 500. And we go back further and further. And businesses that have consistently beat the market, nobody really cares. Nobody wants to talk about them.
We're going to talk about them a little bit more right now. And I want to go back a little bit further in time to lay the case. So we go back to, say, 2010, 2011, 2012. The global economy is emerging from the global financial crisis, which essentially was a crisis caused by significant overbuilding, mostly of single-family homes, and then the debt collapse of the mortgages that were issued for those homes that basically undermined the banking system. So we had this massive glut of extra houses that nobody needed, and it took years to sell through that inventory, get it off of bank balance sheets. But while that was happening, the home building industry was basically gutted. Home builders had nothing to do. So they laid off massive amounts of their skilled labor. Those workers went on to find jobs in other industries or they retired. So many young people were coming into their own and joining the workforce at the worst possible time to be doing that in the past 80 years. And it put a lot of those young people behind in those big milestones, things like buying a house. And as a result, as home builders started to emerge, they focused largely on custom homes, move-up homes. In the case of a company like Toll Brothers, luxury housing, right? So moving more up market where there was opportunity. As a result of that, most of the past decade, we've seen a substantial amount of underbuilding, particularly in the smaller starter home area, but even in some of the move-up homes in a lot of markets. And where we stand today, taking these companies, starting from that 2020 period through the pandemic to tie everything together with where we are now, we saw a massive amount of people that said, okay, now it's time. I'm going to go buy a home. And we saw some of the most aggressive price increases, some of the most competitive markets, not just for new homes, but also for existing homes that we've seen in decades. The Fed starts raising interest rates to fight inflation. And all of a sudden, all of those higher prices for the homes, a little bit of that was getting soaked up with low interest rates. Now we're in a normal mortgage rate environment and housing prices have become stretched. So how are these home builders, how do they go forward from here?
It's a really good question because even though like you said, we've had a massive deceleration in sales, with the one caveat that we actually saw an uptick from January to February. It was the first reversal in sales in 18 months. Right. For anybody who wants to learn more about housing, a lot of what we just discussed, there's a great Substack. It's Calculated Risk Real Estate News by Bill McBride. It encapsulates a lot of things that we're talking about here. But one of the things that we're coming down from epically high margins for home builders, 2020 to 2022 was some of the highest margins in this business. I can remember looking at home builders back in 2015, 2016. Their gross margins back then are about the same as what net income margins were in that 2020, 2022 period. So we were at a level of profitability unheard of in the home builder market, such that...
And to put some context on that, I think everybody knows somebody that sold a house that saw the bidding up and all of the competition, and they realized a substantially higher price than maybe anybody expected that they would get. This is exactly where the home builders were living because they're the sellers of the house, right? And they massively profited from that boom.
So using that context, I would struggle to see them getting those kind of margins again. I could definitely see normalization towards lower margin as prices start to come back down. They're declining on a month over month basis, but we're still like on a year over year, more or less flat. So we're not at this point of housing prices collapsing, but you're starting to see a decline. And we're starting to see sales pick back up again, because even though interest rates are higher, life happens. There's been a lot of doom and gloom speak on social media. Who is ever going to sell their house when they've got a 2 or 3% mortgage? And so you probably don't want to, but life happens. I think the idea that the housing market's going to grind to a screeching halt is a little overblown because
life is not going to grind to a screeching halt. The economy is not going to drive to a screeching halt.
We move.
Yeah, we do. And I think there's an important part of that. But I do think that there is now increased friction for people that own a home necessarily to sell that home if they don't have to. But I think as much as that could create a bit of a headwind for maybe somebody's not as likely to move up to the bigger house, we are still in that structural disconnect between the supply of housing that's available and the growth of new households, right? Household formation has generally recovered coming out of the pandemic, right? It's recovered to what had been an accelerated rate over the past prior years heading into the pandemic, right? So as more households are created, we need more housing, and we were already in an undersupplied market coming into this. So I think that to me is one of the tailwinds for housing for these home builders. They may get more normal margins. They're not going to get windfall margins, you could almost say, that we saw during the pandemic. It's the inverse of the environment that we saw in 2007 and 2008 when everybody stopped buying because the global economy was collapsing and there was all this excess supply. There was a pause in the market. And as it's normal, the cycle, right? The market took a break, took a breath, and now it looks like we're starting to see a return to a more normal environment because life goes on and people can't put off these decisions forever.
If people who are considering home builders, it may just end up being you and me, Jason. I don't know if we're going to convince anybody about home building right now, but I think that people who are willing to put some homework into this business, I think there's some opportunities to be found here. I think companies that have been very good at underwriting their real estate to develop, that have been very good about cost controls and pace themselves, not taking on too much debt to try to meet demand, that voracious demand of 2020 through 2022. I think there's some opportunities here. I know you and I have discussed this a lot. One company that I am particularly fond of is Green Brick Partners. I think they're a great home builder. There's some others out there, but that one has always popped out to me as one of the best managed in terms of underwriting, in terms of balance sheet management and things like that.
I'm going to put Meritage Homes in that same conversation. One of the 10 largest builders in the U.S. They made a strategic decision when Steve Hilton, their founder, was still the CEO, probably 5 years ago, to shift away from custom homes and to prioritize startup, level housing and first move housing. I think the timing was really smart, that it allowed them to reconstruct their business and their operations around this strategic focus, just as demand was really beginning to accelerate. And as a result, they're still small enough that I think they can really benefit from the continued tailwinds, but they're large enough and established enough that they have a process that's going to allow them to benefit from the economies of scale that they've established. Last thing I want to say about both Green Brick and Meritage Homes is thinking about valuation. I think they're both really attractive right now. If you look at forward estimates, price to earnings, they both trade for right around 9 or 10 times expected 2023 earnings. 2023 is not going to be as good of a year as 2022. We've seen these companies pull back a little bit on their building to take time to evaluate where the demand is going to be and make sure that they're walking carefully with how they deploy their capital. But the big key to me for both of these is you pay that multiple today, thinking about 2023's earnings. As the market again normalizes in coming years, these are two that are going to be positioned really well for continued demand over the next decade. And you're paying a pretty reasonable price right now, as long as you're willing to ride things out for the next few years. I think 5 years from now, these multiples, these prices, you're probably going to make good money, and there's a good chance you're going to do better than the S&P 500 too.